Audit Planning and Fieldwork Part 4. Let's start with Audit Program.
I wonder what is an audit program? Audit program is a set of procedures, evidence-gathering steps, that an auditor believes is necessary to perform to obtain reasonable assurance that the financial statements are not affected by material misstatements. It is a set of policies and procedures that dictate how an evaluation of a business is done. Main components of audit programs will include the objectives, procedures and conclusion of each audit work performed. Hey Daisy, do you know why do we need to prepare an audit program?
Yeah, it is to guide an auditor in doing auditing and to provide evidence of proper planning and recording of audit work to be done. Besides, it is to provide the basis for coordinating and supervising audit work and controlling the time spent, as well as to standardize the data collection and evaluation process. Do you know that there are two types of audit program?
Oh really? What are they?
There are standard audit program and tailored audit program.
Let's find out what those types are in details. Standard audit program is available for many different industries and can be used proactively to help an organization create its own internal compliance framework and internal audit program. It is different than a fixed audit program, which is defined as an audit program that cannot be changed during the course of an audit. Tailored audit program is different from the standard audit program because they cater audit procedures to match specific needs of the auditing entity. These audit programs are tailored to reference specific areas such as business procedures, legal documents and assets. By targeting these specific requirements through tailored audit programs, the company can quickly identify potential compliance lapses and develop internal controls to offset these vulnerabilities.
Next, we're gonna discuss on audit documentation. There are two types of audit files: permanent audit files and current audit files. Permanent audit files is a set of records that serves as an ongoing reference for an organization's external auditors. It contains information of historical or continuing and permanent in nature, relevant from year to year. It needs to be updated each year. These are the examples of permanent audit files. Meanwhile, current audit files are files that keep all the data or information related to the current year auditing. It includes all working papers applicable to the year under audit. These are the examples of current audit files. Preparation of working papers. The purposes of working papers is as a fundamental for planning, designing and performing the audit works. It is as a fundamental for review by the partners and supervisors. Working papers provide evidence to support all matters included in the audit report. It is a data to determine the proper type of audit report. Mom, do you know what is the content in audit working papers?
Oh honey, what Mum knows is, the audit working papers headed must include the client's name, the period covered by the audit, subject related to the matter, the references, the staff member's signature who prepared the working paper, the date it was prepared, in the case of audit papers prepared by the client's staff, the signature of the team of audit member who executed the audit work and the working paper's date received. Every audit paper should meet the criteria of a good working paper.
Hey, Brittany. Do you remember what did our professor said about the ownership and confidentiality of audit documentation?
Well, audit documentation is a property of the auditor, and some states acknowledge this right of ownership in their statutes. Auditors should adopt a reasonable procedures to keep audit documentation for a period of time enough to meet the needs of his practice and to satisfy any relevant regulatory or legal requirements for retention of the records. The auditor has an ethical and in some situation a legal obligation to maintain the client's confidential information. They should adopt a reasonable approach to avoid unauthorized access to the audit documentation.
Oh, yes, I remember now. Some audit documentation may serve as a useful source of reference for the client, but it cannot be considered as a part or substitute for the accounting records of the client.
Auditor is responsible to plan and perform the audit to acquire reasonable assurance to see if the financial statements are free of financial misstatement, results from error or fraud. The responsibilities of management is to adopt sound accounting policies and to set up and maintain the internal control that will initiate, record, process, and report transactions consistent with management's statement, including their financial statements. Objectives of internal control is efficient conduct of business. Controls must be in place to make sure that the operations are safe from any problems. This reduces against the risk of inefficiencies and threats to the formation of value in the organization. Controls must be in place to ensure that assets are utilized for their actual motives, and are not unprotected to put to wrong use or theft. Small businesses with undemanding organization structures could probably become victim to these violations. As an organization becomes bigger in size and its complexity, the nature of illegal exercises begin to be more diverse, and controls must have the ability of addressing these. An organization could not be able to create precise financial statements if its financial records are unreliable. Systems must have the ability of recording transactions to ensure that the nature of business transacted is correctly represented in the financial accounts. Organizations must be able to fulfill their legal obligations to submit their account, perfectly and promptly. They also have a task to create meaningful statements to their shareholders. Components of internal control consist of control environment, where control environment is the idea of management and their employees concerning the necessity for internal controls. The control environment consists of the integrity and ethical values, the organizational structure and task of authority and responsibility, and the procedure for attracting, progressing and retaining competent individuals. This is the procedure of assessing the business to search for the most critical risks, and then designing controls for those risks. This assessment has to be carried out on a regular basis, to take into account any new risks developed by new action formed in the business. Management identify objectives by groups relating to operations, reporting and compliance to be able to recognize and examine risks to those objectives. Management also give thought to the suitability of the objectives for the entity. Control activities are the use of accounting systems, information technology, and other resources to make sure that proper controls are operating appropriately. Information regarding controls must be communicated in a timely manner to the management, so that shortfalls can be addressed immediately. The amount of information communicated must be suitable to the essential requirements of the recipient. Monitoring is the set of procedures applied by management to investigate and evaluate whether its internal controls are operating properly. Management must be able to notice control insufficiency and create changes to make. Evaluation of internal control. What is evaluation of internal control? It is to examine the effectiveness of an organization system, where the auditor can determine the extent of other tests that must be performed in order to make an opinion. The step of the evaluation process. 1. Determine the extent and type of control used by the client. 2. Determine which of the control that the auditor intends to rely on. 3. Determine the audit procedure either to increase or decrease that is based on what the first and second step result. 4. Recommend the client regarding how to improve the internal control system. Assessment and documenting understanding of internal controls. The auditor will document the information obtained and their understanding of the client's internal control design in the form of narrative description, internal control questionnaire and checklist, flowchart. The narrative description should consist of segregation of duties, origin document, the record of the document, and the arrangement of the document and the record. The auditor may ask question about the internal control in each of the audit area, in order to indicate the inadequacy of the internal control. It's help the auditors document process and highlight the control gaps, strength, weaknesses and differences within the system. Flowchart is a diagrammatic representation of the client accounting system with the related internal control that show whether the flow of the control in the correct sequence or not, which is from initiation to the recording and the disposition. This will help the auditor in order to identify the control and knowing the differences of the internal control.
Now, let us move on to letter of management.
Sir, may I know what is letter of management?
Letter of management is the letter by an auditor to the management at the end of his audit work, listing any weaknesses in the design or operation of the internal control system, which may have come to his attention, explaining the significance and the effect on current and future financial statement, and make suggestions as the ways these weaknesses can be removed or reduced. Hey, do you know what should I include in my letter of management?
These are the items you should include in your letter of management. First, the purpose of the letter. Second, the purpose of the internal control investigation. Third, the disclaimer or clause that the weaknesses notified are not necessarily all the weaknesses that may exist. Fourth, the weaknesses. Fifth, the recommendations for improvement. Last but not least, the request info on remedial action.
The end. Hope you guys enjoy the video. Goodbye.